Hello, and welcome to the final session of the 2020 Santander International Banking Conference, now in its 13th year.
Now, here we are, 13 years later, and in the middle of a crisis again, yeah? So crisis is, well, probably is part of the life.
Hello, I'm James Harding. I've been hosting the Santander International Banking Conference Insight Series. For the first time, of course, we've held it digitally, and we brought together an extraordinary group of people to look at the state of the world in 2020 and into the decade ahead.
In the first session on banks, central banks, and government in the COVID economy, we heard that governments do have the fiscal capacity to continue to support the economy, and they're going to have to continue to use it.
The challenge is getting the economy moving and growing again.
In the second session, on payments, we learned the difference between fast money, payments and transfers, and slow money, deposits and loans, and how that difference is going to become increasingly blurred over time as data puts all money to better use.
Well, I think we're going to see more change in the next 5 years in the financial system than we've seen over the past maybe 50 years.
Session 3, the following week, we heard about climate change. Markets and businesses aren't waiting for the rulebook on a greener economy. They're already making it happen as investors look for greener companies and punish the laggards.
Either we change ourselves quickly, or the capital markets will change us.
In session 4 last week, it was a panel not just on the US elections. We heard that regardless of the winner, there's going to be no return to the status quo ante. But some things, however, will not change, such as shared principles and values in Europe and the Americas.
And recognizing that whether it's competing, confronting, or cooperating with China, that we are much, much stronger standing with our allies.
Today, we're going to hear from another distinguished group of people on purpose in the next normal. In addition to Annabel Bouton, the executive chair of Santander, we will have Professor Yascha Mounk, an expert in the challenges to democracy in the 21st century, Larry Fink, the chairman and chief executive of the American asset management giant BlackRock, and Nadia Calviño, the vice president and minister of the economy of Spain.
Welcome everyone. It is great to see you and great to have you joining us. When we started this, the first digital Santander International Banking Conference, we weren't aware that there were advantages to the world we're living in 2020, that we'll be able to reach a much bigger audience than ever before, but we'll also be able to bring in a range of people and thinkers than ever before. And I hope that has given you a small taste of it. Today, what we're trying to do is draw together our thinking in 2020, but also look ahead into 2021 and the decade ahead. And I'm delighted that I'm going to start by asking Annabel Bouton, the executive chairman of Santander, to do what you just described in that quote, Anna, to imagine the future by building it. And I suppose the first step in that is just digesting what we've learned, or more importantly, what you feel you've learned in 2020, how your thinking has changed.
So, hello everybody, and hi James, it's great to be here. Well, be here virtually, and hopefully next year we can do this in person. I guess the first thing we've learned is that Zoom and video is fine, but personal contact is hugely important. So this is, I think, something we have all learned. But beyond that, climate change had already taught us that there are global problems that require global solutions. But what's happened with COVID is that we now have gone a step further. My health, my life, my work, my company, my country, we depend on and we affect the rest. And this is something which is now absolutely, we know it, we understand it because we've lived it. So this is, to me, the huge lesson from COVID. What this means, I think, first for our societies, there's a growing sense of place, which sounds the opposite of what I just said, but it is happening. Local authorities using or calling for powers instead of the central government, we're seeing this all over the place. We're going to see, and we've seen a growth in the role of the state to levels that we've never seen before. And here, parenthesis, it's important that governments are not the ones that are going to create long-term prosperity and sustainable jobs. It has to be the private sector who leads on this, of course, with some public support. Growing levels of debt. I know this is an obvious one, but we need to make that debt sustainable at some point. That means more equity, more capital, especially to SMEs. I can go more into that later if you'd like. And of course, there's a growing divide between the United States and China and Europe. Again, I'm sure we'll hear more about that later. In terms of the economy, there's lots of things changing too, by the way. Of course, there's a heavy blow to all those sectors that rely on human contact. And this is obviously a huge part of our economy: hospitality, aviation, sectors we're now heavily supporting with lending. The move to digital, which was already there. Dan Schulman was saying that. I agree with what he said, that we're going to see more change in the next few years than we imagine. And of course, the growing strength of all digital businesses. Just in our case, for example, half our sales, half of everything we do with our customers, 50% is digital. In the case of the UK, it's now up to 80% in the last month. So really a huge change. And of course, the big one, which is a growing divide between those that can work from home and those that cannot do that. So I like to end with this point, which is to be hugely important. I've said this before, because the conclusion of all these changes is that there's even a wider gap between the haves and have-nots. And this goes for countries, for companies, but very importantly for people. And I've said it before, we need a new social contract. It's now not just important, it's urgent. Now, to me, what's important is what are the guiding principles of that new social contract? Security, efficiency, transparency. This one you're going to like, James. Fair competition, fair regulation, and fair taxes for the digital age. A sustainable economy, an economy that doesn't leave anybody behind. And I do believe that this is something we need to do together, the public and the private sector. So I stop there, but again.
You stop there, Anna, but also just listening to that, one of the extraordinary things about this year, isn't it, is it has been one of those moments that really made you look up. And just listening to you, the global and the local, the private sector and the state, the digital and technology and a new social contract, there's a huge amount for us to talk about. I'm aware that we're going to have time when Larry Fink from BlackRock joins to sort of dig into banking and finance some of those economic matters. And when Nadia Calviño comes, I'm sure we'll hear a little bit about, or a fair bit about Spain and Europe and the outlook. We'll be joined in a moment by Yascha Mounk. We'll talk about some of the politics of this. So I just wanted to focus in, if you would, for the here and now, so that we're not too theoretical. What do you think about what governments need to do now to tackle what is, and there's no getting away from it, a very difficult time for many businesses and for pretty much most economies?
So, I think the first thing is, I said it before, we are in an interconnected world. So international cooperation is crucial. We're not through the crisis. I keep on repeating this. We keep on, and we have to speak about recovery and, building back better. But the fact is, the more we manage better the situation for the next 6, 8, 10 months, nobody knows, the easier it will be to recover. The less people will die, the less companies will die. So we need coordination now. And again, it has to be ideally global, but at least regionally within Europe, for example. The more we invest in health systems, test, track, treat, the more companies will survive, the faster we recover. Of course, we need the vaccine, but we need to put more resources and more cooperation, more sharing of best practice, because money spent on this today will save money being spent later, a lot of it. The crisis has tested the resilience at many levels, right? And, what's clear, and what I'm going to say is not my thesis. This is Oxford COVID-19 tracker, the Blackrock School of Government. The conclusion of the reports they're doing, which are excellent, by the way. First, the pandemic requires an efficient strategy that means results. That is possible to implement, that does not discriminate, for example, teleworking versus not, and if, and of course it does, the state needs to help those that cannot work from home. Second, it's clear that when the virus is out of control, confinement works, parenthesis, independent of the economic cost. And it's also, again, according to the studies, the less efficient, the longer it lasts. Yeah.
I just want to ask you about that, because I'm struck by you talking about test, track and trace. You're in Madrid, I'm in London, Yascha's I think going to be joining us from Berlin. We're all having these same very heated arguments about the extent to which the healthcare interventions and the social interventions are working. I'm just interested, the last big crisis we had like this was the financial crisis. There was global coordination then around response to that financial crisis. And I wondered whether, before I go to Yascha, you could just say what you think about global coordination in the financial world by comparison with the global coordination you're seeing in society and around healthcare.
I think global coordination in the financial world has worked much, much better in this crisis than in the previous crisis. And especially in Europe, we've been able to get fast and sufficient support from the authorities, from the ECB. It has been very coordinated across the developed and many other countries across the world. And this has been hugely important because the liquidity is there. Of course, we're now going to have to then grow out of the debt, but until now, it's, and of course, the health systems across the world were not ready for a coordination that we needed, were not ready, had not planned. Nobody was expecting this. And I don't think any country in the West, maybe in Asia, yes, but not in Europe or the Americas, we didn't plan for this. And so the systems, the process were not there. But again, going back to the Oxford data, what's clear is that successful countries, mostly in Asia, and the latest measures and data from what we've seen the last few months is that the test, track, and limited quarantine is as effective or more than confinement. And the costs are only a fraction. When I say a fraction, it's probably 1 in 10. Mm-hmm. Wow. I don't know if I have a minute to just give you my 1 minute of our personal experience at Santander. And this is just from Spain, just to let you know how we have 34,000 employees. We are testing, this is PCRs in the last 14 days, 4,851 per 100,000. We have 242 with the virus, 3 people in the hospital, 1,123 in quarantine. We're using our own app to track, trace, report, and test. And the ratios of infected cases per 1,000 employees in branches versus headquarters, because branches are obviously very close to customers, is 0.09. That is more or less the same. So our experience shows our people are not getting infected at work or traveling to and from work. They're getting infected at home or with friends. And it proves, again, it's all over Spain, by doing test, track, isolate in the right way, we're managing well both the sanitary and the economic goals. So I just wanted to share our experience because I think it's relevant.
No, and by the way, this is exactly the same conversation we're having in London, Anna, which is the test, track, and isolate is absolutely critical, and you see it all over the world. And likewise, also this question about work, that work is not the place, at least in the UK either, where you're seeing the infections really being driven, as you say. I think this is really interesting. I also have to say this point about the financial coordination is really significant because it's a dog that hasn't barked so far. It's been one of those ones that's come as a surprise. I want to, Anna, come back, if we can, to talk more about the real specifics of some of the things you touched on at the beginning, technology and what's happening in finance, and that social contract point, right? Because this conversation, this final session of the conference is really focused on purpose in the next normal. And obviously that applies hugely to businesses. But we can't really have a conversation about it today without taking a serious look at the political context. And we're really lucky that Yascha Mounk is here. Yascha, we're really delighted that you joined us. For those people who don't know, Yascha Mounk is the Associate Professor at Johns Hopkins. He's the founder of this really powerful and extraordinary digital group of thinkers and writers called Persuasion. but he's also, as I like to say, the provider of really quite often very depressing data and surveys about the health of free societies and public attitudes to democracy. So I wanted to start, Yascha, by saying, you know, I've read so much of your work in the last few years, making us think that young people are giving up on democracy. They think there's more to be said for the strong man. Surely the one good piece of news in all the uncertainty that's come out of the US is that the public, at least, still believes in democracy. They're going to the polls.
Well, James, I agree. I've actually been more optimistic than many of my friends and colleagues for the last days and weeks. I thought there was a lot of fear-mongering before the election about an impending civil war, about the possibility that Donald Trump might somehow stay in office or carry out some kind of coup or putsch, even if he loses. I think that was all, frankly, a lot of my dear friends in the United States falling into a little bit of a panic. What we've seen is that it seems quite likely at the moment, and I'm sure there'll be mixed views about this in this audience, but it seems quite likely at the moment that Donald Trump is about to lose. The American institutions are holding better than those that were attacked by other authoritarian populists around the world. We've had a free and fair election, which has overwhelmingly been peaceful, and actually attempts by the Republican Party of Texas, for example, to throw out 100,000 votes there under relatively spurious reasoning, were thrown out unanimously by the Texas Supreme Court, which has 9 Republican-appointed, very conservative judges. So, you know, I think the health of American democracy has been tested in the last 4 years. I think we need to be very, very aware of the threats to democracy in countries from the European Union, I mean, Poland and Hungary, to places like Brazil and India, the Philippines and others around the world. But from my perspective, it looks like the United States has just won one of the first big victories in the battle over the preservation of its democratic institutions.
And what do you say, Yascha? I want to talk about the structures of democracy, but also the practice of politics, because two things seem to be happening at the same time. You have huge public participation in the polls, and you have, as you say, the courts defending the rule of law and the right to vote. At the same time, you have, on the night of the election, the president making claims about vote counts that, regardless of whether you're a Trump or a Biden supporter, are clearly not true at that time. And there's a change to the culture of politics that is not just true to the United States. It's true, it seems, in most Western societies in one form or another. What's happening there and what's driving that?
Yeah, I mean, look, to me, the heart of populism, which I think is the movement that we're seeing around the world, is this claim that I and I alone speak for the people, and anybody who disagrees with me isn't just wrong about an important thing, doesn't just, you know, there's not just a fear that they're not going to govern the country as well as I would. They are per se illegitimate. They are enemies of the people. They aren't truly part of the people. And I think we're seeing that in the readiness that a lot of these politicians have to undermine long-standing basic democratic rules and norms. Now, you know, you can have different opinions about, you know, the best economic policy, whether Joe Biden or Donald Trump is likely to know best how to restart the American economy after the pandemic and so on. We can debate all of that. But I hope that all of us will agree that the president of the United States saying in the night of the election without any evidence that you know, the mail ballots being counted, which everybody knew would happen, which everybody knew would take a little while longer, is somehow a massive attempt to cheat him out of his victory, or refusing to commit to a peaceful transfer of power. You know, those are things we should all reject, and they're a sign of a threat that democracy is under in the United States and around the world. And what we've also seen in this election is that you know, that is not the preference of the majority of American citizens, but it is something that a lot of American citizens can brook, especially because the Democratic Party has also gone far left in a way that I think has helped convince a lot of Republicans to stick with Donald Trump, even though they didn't particularly like him. And so that means that these movements are not about to disappear. This is not a fight that will end, even if, as currently seems somewhat likely, Joe Biden is declared the 46th president of the United States.
Yascha, can you talk about the link between democracy, the health of democracy, and the economy? Because the other thing that
anyone will point to this week is that Donald Trump has increased his vote. 68 million Americans are voting Donald Trump. And at least one of the interpretations of 2016 was that the thing that you hold close to your heart, the idea of a free society, in economic terms, is not working for enough of its citizens.
Well, let me say three very brief things. One is, one of the reasons why these populists have a chance of winning is that so many people are disaffected with the economic and the political system, right? So in the United States, from 1935 to 1960, the living standard of an average American doubled. From 1960 to 1985, it doubled again. Since 1985, it's been flat or stagnant. And that really changes how people think about the economy. It's not about politics, sorry. It's not that we used to think Washington, where I am right now, is the sort of seat of moral virtue in the world and politicians are all wonderful. Nobody thought that in 1970 any more than today. But they used to say, you know what, something seems to be working here. My life is getting better. So let's give them the benefit of a doubt. You know, something seems to be okay. Today they're saying, I'm not doing any better than my parents were. My kids might do a lot worse than me. Let's try something new. Let's send somebody to, you know, mess up the system a little bit because there's not really anything we have to lose and any change would be positive. The second I want to talk about, which I think is important, is the threat that these kinds of populists pose to business. That's obviously true of left-wing populists like Hugo Chavez in Venezuela and those kinds. But I think we can see in Turkey, for example, that it's also true of right-wing populists. Because what business wants more than anything else is that your profit depends on doing a good product, producing it cheaply, selling it for a good price, right? Mm-hmm. You want to know that your performance depends on how well your company actually does. Well, if you have politicians who don't recognize independent institutions, who start to undermine the central bank, who put their son-in-law in charge of the economy, etc., what you eventually get is a corrupt system in which your success depends on your political connections or the bribes you're willing to pay. And that's not good for individual companies. It's certainly not good for national economies.
But Yascha, that may not be the lens through which people see things in 2020, because, and I just wanted to get your sense of this as regards the pandemic and the point that Anna made at the beginning, the US-China East-West point more broadly. Yep. Take particularly the point that she raised about, test, trace and isolate. And why is it that certain countries seem to have done so much better than others? Some people are beginning to draw the conclusion, and you may think it's wrong, but some people say, actually, those countries that are more autocratic than democratic are able to impose systems of, some call it control, others call it organization, inside their society, so they're able to control the health impact of the coronavirus and the economic consequences.
Yeah, so that seems wrong to me, because you can look at the countries that have done the best, and some of them are democracies and some of them are dictatorships. Quite clearly, East Asia has been the most successful in suppressing this pandemic. And so, Japan and South Korea have both done very, very well. So have, semi-authoritarian systems like Singapore. And after big initial stumbles, so has China. Now, what I think is true...
But that's the critical one, sorry, Yascha. That's the critical one, isn't it? In terms of global perceptions of, if you like, East versus West, free versus control-based societies, China's the critical one. So how do you interpret China's relative success in dealing with the pandemic?
Well, again, I don't think that it is because it's an autocratic system. Otherwise, we couldn't explain why Japan and South Korea did well as well. I do agree with Anna that, we've become too unambitious about this. I mean, we're spending a lot of time in Europe and America comparing ourselves to each other. And, until a few weeks ago, Europeans were a little smug about doing better than Americans. And, Americans, were a little sad or perhaps in denial about the fact that Europeans seem to be doing better. Right now, it's far from clear that Europe is doing so much better than America. We are back in lockdown in a large number of countries in Europe. We're not in the United States, even though the case rates are going up here a lot as well. The more important truth is, collectively, Western Europe and North America are failing compared to cultures and countries that are dealing with it better. And that includes Japan, includes South Korea, and includes China. So we should all up the level of our ambition. And I agree completely with Anna, test, trace, isolate. It is astounding that there's no serious attempt at this at a national level in the United States, for example. I mean, just astounding.
Yascha, I was struck. One of the reasons I mentioned that you'd founded Persuasion was that I was struck when it was created, when you created it, that you'd set up something called Persuasion, that you wanted to persuade me. And I was thinking of the sort of media brands that had been born in my working life, one of which being Crossfire, right? And if you like, so much of our political culture has been about this polarized confrontation. I'm sort of really, if you like, already persuaded by the idea of persuasion on the basis that it's that. But what are you trying to persuade me of?
Well, what Persuasion is a platform to fight for the basic values of philosophical liberalism, the basic values that are inherent in liberal democracies that include not just popular self-rule, but also the maintenance of the rule of law and of independent institutions that aren't centralized, where the prime minister or president can't tell everybody what to do, because we recognize that we also want to be free from government to a certain extent. And the fight for values like free speech, which I think is increasingly under threat, both legally and formally in many countries, in part because of the influence of countries like China, in part because of hate speech legislation, which can be too broad in certain contexts, but in part because of a sort of form of self-censorship in the media, where there's a prevailing opinion that make sure that you're sort of treated nicely at the next dinner party. And out of fear of being treated badly at the next dinner party, people don't point to inconvenient facts, which I think has something to do with the underperformance, actually, of the Democratic Party in this last election.
Well, Yascha, thank you. Thank you for doing, at a time when we still know relatively little, help us understand a good deal, not just about the situation in the United States, but the implications globally and for people around the world, and for the nature of our free society, for the political context of that social contract we talked about at the start. Professor Yascha Mounk, it's been brilliant listening to you. We're joined now, I'm delighted to say, by Larry Fink, the Chairman and Chief Executive of BlackRock. Larry, thanks so much for making time. I hope you've managed to get a little sleep over the last couple of days, but I somehow doubt it. And of course, Annabel Bouton is with us too. Larry, we've just been hearing from Yascha, as you heard, about the politics. So I want to steer in, if you like, more to the current politics of business. And, it's fair to say that the letter that you wrote 2 years ago to company chief executives and leaders that BlackRock invests in did change the fundamental set of expectations around business, certainly articulated a view around purpose. A lot of people on the call, and this conversation is about purpose in the next normal, will, I think, be interested to know from you what you've learned in the last 2 years about the way business is responding to that agenda of environment, social and governance expectations.
Good. Well, hi, James. Hi, Anna. When I write these letters, I never expected the response that I received. And I think much about the letter was, and the reaction to the letter was a large reaction to where society was. So I don't know if my letter did much other than identify where society was moving. And I think society is rapidly moving towards a greater connectivity with major companies and hopefully all companies. I would say very clearly, especially in this COVID world that we're living in, the companies that have accelerated their positioning are companies that are much more purposeful, that are companies that are building deeper foundations with their employees and connecting with their employees. Most certainly today, we're seeing more and more of clients. They're not just doing business because it's simple. They're doing business with organizations they connect with, whether they connect in the products or the philosophies of companies. And I think in this world that is becoming more deglobalized and more countries and more societies are asking, what are you doing for us in our country? I think more than ever before, all companies have to prove their purpose to their employees, proving their purpose to their clients, and most importantly, to the communities where they are doing business. And I do believe those companies who are responding that way are building more durable profitability for their primary stakeholder, their shareholders, their owners. And I do believe that's showing up, and it's showing up in a huge differential in PE ratios of some companies and industries and other companies. And in this past year letter, I wrote about a whole reallocation of capital. I spoke about that related to a reallocation of capital related to sustainability, but I would also say a reallocation of capital for those companies who are more purposeful, and they're driving more connectivity with all their stakeholders.
And Larry, I don't know the exact cycle of the writing of the letter, but I know when it comes out, which is at the start of next year. So
yes, I'm writing this year's letter right now as we speak.
All right. So as you're thinking about it and you're drafting it, there's the walking and chew gum question, which is can you reasonably expect businesses to be making these big changes now, when for a lot of them they are dealing with the level of disruption and frankly obstacles to their own businesses that make it very difficult to make progress at just their core business doing what they're doing?
On the margin, I think more companies are trying to move forward in that way. And this is why, we are criticized in some circles that we're not doing enough in terms of our stakeholders and how we're voting related to our corporate stewardship. We have to be patient with companies too. And we don't divulge our conversations with companies, but I would say to you, James, more and more companies are focused on this, more boards are connecting on this. I would also say we saw from my last year letter, I asked every company to report under SASB and TCFD. Mm-hmm. There's a 400% increase in companies now reporting under SASB. We expect that to double as more and more companies are willing to be that transparent and expose their issues around diversity and gender pay and racial equity through SASB, as more companies report about their carbon footprint through TCFD. I actually believe we're going to see this transformation occur faster, and the more companies are preparing for it. If I had a societal issue, though, I don't have the power to ask all companies. We're just asking public companies. Yeah. And in most societies, the majority of employment is in private companies. Mm-hmm. And what we don't want is having public companies being asked to do so much more than private companies. We need to, if we're going to create a more inclusive society, if we're going to create inclusive capitalism, if we're going to have a better economies that more people participate, it has to be done not just at the public side that a BlackRock can do because we're a large shareholder. Yeah. It has to be the demands from society working alongside with their governments and working alongside the public sector. We need to even this out. We need to elevate all components of our business community to do more.
Larry, thanks. I want to ask Anna how she reads this. I know you'll have been a reader of Larry's letters, but also been alive to the pressures from employees and shareholders and customers on the climate agenda, clearly in 2020 on the social justice agenda, and for some time, as you know, Anna, around the governance of companies. How is the push for ESG, the push, if you like, for purpose, changing the world of banking, and I suppose specifically Santander?
Well, let me say I'm a very attentive reader of Larry's letter, not just because I believe in what the letter says, but also because I believe he is my largest shareholder. So I think it's hugely important that investors really reward companies that are good citizens. And this is happening, but not as much as I believe it should be. So, there is one thing we've learned in this crisis, and it is that our health, our quality of life, our well-being depends not just on what I do as a person, what I do as a company, and I think Larry just made that point, public, private, but also on what others do and how we interact with society. And so we're facing global problems. It's a virus, it's the environment, inequality, populism. So we need to work on this together. So the first lesson to me is the responsibility of governments, and there's a role for governments, and there's a role for governments to be coordinated. by the way, this is going exactly in the opposite direction, unfortunately. But to me, that's a great lesson, and one that is not just me and us, it's everybody, I think, on the planet has realized that this is something which is important. Related to the ESG, I'm going again to the SASB and GRI. To me, it's crucial that we agree on standards, that we end the alphabet soup of ESG frameworks. I mean, there are as many as people, in this conference, and probably more. And here there's a lot more to be done. And of course, as a bank, I want to say that Santander is carbon neutral this year, net zero. But of course, it's not just me as a company, it's my customers. And so all sectors need to work on metrics and risk analysis. Otherwise, banks will not be able to do what is expected from us, which is to measure climate risk exposures in all finance.
And will you just pick up on the point that Larry made? Because I see your point about things being uneven because the metrics are uneven, or in fact not even there. But Larry's point, which was that BlackRock can exact a certain set of expectations on publicly listed companies, but obviously not on private ones. And how much do you see a world in which the listed sector operates increasingly differently from the privately owned sector?
Look, to me, that is, it's important, but what's more important is that I'd say my team and I, we believe in that what we're doing is the right thing. It's not just about being responsible. I said this in my first speech at this conference 6 years ago. It's about having a clear purpose, which we articulated to help people and businesses prosper. It's about our employees first, our customers, our shareholders and community. We call it the virtuous circle. It's about defining how we as a company want to be and do things in a way that is simple, personal, and fair. So again, we can do as much as we can for our customers, for our people, for our shareholders, communities. I think we need leadership from investors, from governments to make sure everybody else does the same. But, we're going to do it, whatever others do, because we think it's the right thing for all our stakeholders. And, hopefully it'll be reflected in the share price one of these days, I hope.
Larry, can I go back? I know I mentioned to you how businesses deal with the world that they're facing and how they incorporate purpose into that. Obviously, in the light of the election on Tuesday, there's a lot of short-term debate about the way the market's responding. I wonder whether you could help us by stepping back from that and saying, look, 2020, the world gets hit by a pandemic. There are clearly economic responses, one of which is low interest rates, and probably low interest rates for a while. Can you give us some sense of what the implications are that, both in the world of finance, but I suppose more broadly in society too?
Well, that's a very broad question. So let's start off with, we have witnessed huge fiscal stimulus and very, very large monetary policy. Monetary policy are the tools that are most used in the last 10 years. Monetary policy monetizes financial assets, and those who own financial assets do very well. Monetary policy, though, does create huge inequalities. So let's be clear. Those who don't have financial assets are not bearing the beauty of the rising markets, where those who have financial assets are doing very well. So this is why we have to have greater reliance on fiscal stimulus to have more targeted help in the parts of the community where we need help. So one observation is, are we overusing monetary policy, underusing fiscal stimulus? And that's a big question for Europe, as Europe is trying to struggle with, the different positions of different countries, the debt to GDP ratios that we see in some of the other countries. But I would say Europe did a better job in this pandemic recession than they did the 08-09 recession. And I think they've been more responsive in fiscal stimulus. What has been articulated by most central banks is low interest rates for longer. Low interest rates longer creates a huge new dynamism that savers are harmed by that, because savers historically have invested, especially in Europe, in more fixed assets, fixed rate assets and bonds. And many Europeans in many of the countries put most of their money in bank accounts. And so it actually creates a negative response because they're earning less on their money. But for pension funds, the problem of low interest rates longer, and this is why I'm citing this as the great silent crisis, is as we have lower interest rates for longer, it means we have to recalculate the cost of our liabilities, the cost of our pension liabilities that so many companies and so many governments have. As we have lower interest rates, we quantify the liability to a certain rate, and that rate now tells us that the value of those future obligations are more costly. And what we are seeing as a response by pension funds worldwide is the need to invest in longer term assets, which generally means equities or some form of long dated asset. And this is one of the reasons why we believe why the equity markets have done so well, is because knowing that we're going to have lower rates for longer, the need to acquire long dated assets to match your longer dated liabilities is real. And so this is one of the fundamental reasons why people are confused about what's going on in the equity market. Obviously, some components of the economy are doing really well, others are doing terrible, but the overall demand for long dated assets is so severe. And one of my biggest fears as a result of monetary policy and the persistence of low interest rates, I have always been a very long-term optimist, and I built BlackRock on that optimism over the long run. I am a short-term pessimist, and through that pessimism, we resolve problems. This is why I love humanity, because we are really successful in managing problems. And I think how humanity is navigating even COVID, even with what's going on now with the rising infection rates. But if the science and technology works, that we have antivirals and vaccinations that'll come out sometime next year, that's a miracle. How we adapt and how we work is a miracle. We are adapting really well by working remotely. So my point is, I believe the biggest problem I don't read about is the problem of retirement. Right. And more people are ill prepared for retirement, and they don't have enough savings. And that will present us a huge problem in the future. And that's why I call it the silent crisis.
And Larry, can I, by the way, I love long-term optimist, short-term pessimist. I can see the logic of that. But just listening to you, I can see the point you're making that, in order to take care of retirement, people need a long-term investment that's going to meet their long-term liability. And I can see how then that plays out in stock markets. That's, if you like, a markets point, right? The 2 points you made at the top, though, which are that, monetary policy monetizes financial assets, and your second point about this great silent crisis, i.e. the cost of pensions, those are public policy problems in a big way, because if I read it right, one is an inequality problem and the other one is cost of taking care of old age, whether that sits with companies or individuals. So what's your remedy for that?
Well, for the inequalities, it has to be more targeted fiscal stimulus. It has to be strong public policy, whether it's an infrastructure bill for more job creation. There are many public policies that we can try to navigate. Income redistribution, and there's a lot of academic research now on how income redistribution is done through taxation, and by and large, it really works pretty darn well in most countries. If you look at it on an after-tax basis, I know there's a lot of people talking about it hasn't worked. There's more new data coming out that it's working better than we all think it does. If you measure it on an after-tax basis and what the tax rate, people look at it on gross income, and so that skews everything. And then the most important thing related to retirement, as I said, we need to talk about it. We need to identify this as a problem. That's my short-term pessimism. The fact that we don't talk about it creates long-term pessimism on this one point. The sooner we address this, the sooner we talk about it. It's just so ironic to hear how many people focus on their health and talk about their health, and they're taking vitamins, they're doing more exercising. They want to live longer. That's a human condition. We spend so much time to try to have a condition that we could live longer. We could see our grandchildren or great-grandchildren but we spend no time in asking ourselves, how do we develop the savings to afford longevity? And I wish we had that dialogue just as much as the dialogue about health. And, there's in the newspapers everywhere, there's something about how to build better health and better longevity. But there's no conversation going on in Europe or in the United States or even China now, which they have a huge retirement problem. There's not an adequate conversation about how to be better prepared. So as you frame the question, James, you're right. It becomes a bigger and bigger liability. And could that liability create even more economic slowness? Could the fear of retirement create less consumption? Could that create more fear of the future, less hope for the future? And those are the issues why I think we better talk about it now before we lose hope for the future.
All right. Larry, thank you. Anna, do you want to respond? I have a question about low interest rates and banks, but actually, I wonder whether you want to respond to that point about this, quote, great silent crisis.
Yeah, I was going to say, I mean, one of the options is buy Santander shares, Larry.
We do own it. You said we're your largest shareholder.
Yeah, but you can always have more. They're at very low levels, and I tell you that people are not liking us so much these days, precisely, and this gets me to the point. I'm not just doing advertising here. They don't like emerging markets. And part of the response to your question is we need to invest in emerging markets, which are high growth. And half our business, Santander is the biggest bank in Latin America. If you look at our results year on year, lending in Brazil up 20%. By the way, low risk assets, mortgages, Mexico, a bit the same. So the low rate environment is actually helping these countries finally be able to afford and actually be able to pay back debt, even in a year like this. They're Mexico, Brazil, great payback.
Can you explain that a bit? Because, if you like, I think I followed Larry's point about what low interest rates do for savers and investors. What does a world of very low interest rates do for banks?
Well, obviously it's not Hollywood. It's about low rates for longer. Think about money as our commodity. Our commodity is negative. So, guys, this is not an easy life, right? And of course, we have much more regulation we had before. So I fully agree with Larry. Monetary policy has its limitations. And there's something called the reversal rate and a Princeton study that shows that at some point, negative rates have the opposite effect. And just a fact for you, again, Santander deposits grew in Spain by 9% year on year. Now, this means monetary policy. Of course, there's the crisis, but there's a lot of evidence that it's not enough. And so we do need targeted fiscal policy that helps saver. The regulation is not helping banks either. And of course, we all know that there has been some recommendations from certain central banks about dividends, which is not helping. But very importantly, it's also the competition from new entrants that are playing by different rules. So there's all this combination of context.
And I want to come to the new entrants and to tech in a moment, because that's in some ways where we started the conversation. But can you also just give us a sense of how you see things? I'm interested that you talk about what's happening in Brazil and Mexico. We're trying to talk about very different economies in very different parts of the world. And I wonder, when you look at the map, if you like, the banking in Europe, banking in the United States, banking in the countries of Latin America, how you see those things differently and the opportunities and the problems differently?
Well, I mean, Europe has less growth, even though there are segments in Europe like savings and investments because of the aging that are growing, but there is less growth than we have in the Americas. So if you look at North America, the combination of growth and stability in the US, it's probably the most attractive banking market in the world still today. That's how we see it. We're doing very well in the US. In spite of the issues, we know every country has challenges. We see Latin America as a hugely attractive market, 600 million more people, 300 million of which are still unbanked. We are seeing a huge uplift in digital banking across the Latin American countries. We're growing not just in the digital side, but also in the overall much more demand for loans with the lower rates. So it's a very attractive growth market, not just for banks, but for everybody. I'm always surprised why the US is not looking a bit more south. I know Larry is, by the way. We are. I know BlackRock is. He was in our board in Mexico, telling us about basically how investors are seeing Latin America. But you're a bit the exception, Larry. I mean, I think there's a huge opportunity with a huge consumer market that is growing, that is doing better. The lows are always higher in LATAM. The institutions I know there's a lot of work to be done. We recognize that, but they're getting better. So, by the way, going to your definition of your short-term pessimist and long-term optimist, I define myself as an optimist who worries a lot. So,
very similar. Larry, will you just pick up though on that point about banking and the map, how you see things?
I think Anna said it very well. Negative rates is harming profitability. Low rates for longer means, subdued profitability for banks. Banks make a lot of money on transactions, though, and the flow of money. So, but banks are like savers. Low interest rates, negative interest rates, and Anna talked about the Princeton study, has a point in time where it's pretty negative. It's a shock to savers. And the reason why I don't understand negative rates in Europe, because most Europeans have 80% of their savings in a bank account. Europeans are not participating in this big equity rally. I mean, every time I could come to Spain or France or Germany, I raise everybody this whole idea that you are so mismatched. You have all your, you need to be saving for a 20, 30, 40-year liability, and you keep all your savings in a bank account. And that's considered prudent in Europe. And I would call that unfortunate. I'm trying to be generous about it, because it's a, if you were a regulated individual, you would say you're mismatched and the regulator would come down on you. You got to be more matched. And yet, for some reason, and maybe it is a function of 2 world wars on the European soils, but Europeans are more pessimistic than Americans. And I do believe that's one of the fundamental reasons of why Europeans keep so much of their savings in a bank account. And why, another reason why I think Europe is not as technologically driven in terms of creating these new unicorns and these new companies. It's just a foundational issue of Europe, that Europe is in defense right now and behind what's going on in technology related to the United States and technology going on in China and other parts of Asia. And this is a big issue. You asked me about low rates, but I do believe this low rate and how the consumer is positioned for this is just another example of the structural problems of Europe today. And it manifests by this pessimism, whether that pessimism where you keep your money, or that pessimism that has not flourished the entrepreneurial spirit that you see in the United States and China.
But there'd be some people who would say it's not just cultural or historical, but they would say, Anna, wouldn't they, that there are structural issues in the financial markets in Europe, and particularly in the idea of European financial union, banking union. And Anna, I just wondered what you think the structural answers are. I know Nadia Calviño, the Vice President for the Economy, is joining us in a minute. So before she does, I'm interested to know what you think Europe needs to do to answer the points that Larry just made.
Oh my God, I'm sure Nadia can answer that much better than I can. But I'd say that in terms of banks, we need a single market. So if I'm in the United States, I have one single market. In Europe, we just launched our Open Bank, which is a fully digital bank. We created our own software in Germany, Holland. it's not the same rules as in Spain. And so this means that those unicorns, Larry, in Europe have to fight against different regulations. And so this is one thing. We need a single united banking and services and capital markets union. Second, we need forward-looking regulation that is fair to both the incumbents and the new entrants. If I'm doing payments in that part of the business and we're just launching our own payments company, because we're one of the 10 largest payment platforms in the world with, revenues growing at 30-40%. It takes us months longer than it takes somebody doing exactly the same thing, which usually are large companies, because we're regulated as a bank in payments. So we need, and I was saying it before Larry arrived, we need regulation, we need competition rules that are fit for the digital age. By the way, taxes that are fit for the digital age. The combination of these factors, plus the lower growth in Europe, is, I think, behind. There's also a cultural issue, let's face it. Yes, the optimism of Americans. In that sense, I see myself as an American, by the way. I am very American in that sense.
I want to, just because I'm aware of time, forgive me, Anna, I want to, make sure that we take some of the questions from people all around the world who've been calling in. One of them, Larry, I have to say is for you, is what's your view on Argentina? So I'm going to ask you that. But I do think there's a question about Argentina and particularly about Latin America. Anna just sort of teed up saying you are BlackRock looking south. Will you just know what your thinking is on that?
Argentina is a complex answer. We've witnessed a new government that's trying to make a remarkable change in the direction of Argentina. It's going through another debt restructuring with the private sector and the IMF. We just seen too much volatility in Argentina, flip-flopping one government policy to another government policy. Each government has great ambitions, great optimism, but it falls on the back of foreign investors like this last time. It was only 6 years ago there was an IMF bailout. Between the private sector and the IMF, we're talking about $70-odd billion of structuring, and then the private sector only earns 50 cents on the dollar on the bailout. It's going to take time, a lot of time, for the private sector to feel comfortable to invest back in Argentina. That being said, Mexico, that Anna's large in, Mexico is one of the great opportunities in the world to invest in. Colombia is improving as a destination for investing. Brazil has great highs and great lows. Brazil, hopefully we will have less volatility, but over the long run, Brazil will be a great place to be, where Anna is also. Chile, the consistency of Chile is a great place. So I would just say, as a capital allocator right now, if you're interested in LATAM, they're safer, more consistent places to invest in Argentina at this time. I hope the current government builds that confidence back, and that we could feel comfortable that we could invest. We're investing for retirees. We need to feel comfortable that we're not going to harm the money that we are entrusted with our clients, that money is safe, that we're going to earn, if we're going to invest in debt, that we're earning a debt that is equivalent to the risk we're taking, and that we have confidence we're going to get 100% of our principal back. Right now, you just don't have that confidence.
Larry, can I ask you, there's another question, I'm going to put it to you and to Anna. There's a question which is about how the changes of 2020, particularly the way we live and work, are going to make a permanent difference to our working lives. And you touched on this just now about technology and unicorns. The most obvious one for everyone is technology. And I wonder, if you look ahead, 2021, but into the decade, what you think technology is going to do in business, but in society too.
Well, I think what we've seen because of COVID, we've truncated 10-year technology trends in 8 months. Can you imagine a COVID world without this technology right now? If we had a COVID pandemic 6 years ago, I think the world would be in a depression. I think companies that have been enriched by technology have been able to benefit because of that. And we've been able to do many things through technology. I would say, though, what the beauty of humanity is we're adapting, we're growing. We're adapting by doing more things via remote. We're consuming more of our consumption via internet now. We're being educated more by the internet, and we're placing more connectivity with our medical institutions related to technology. So I think how we work, how we live, how we are educated is going to be more driven by technology. The last thing I would say, the companies have learned, like BlackRock, that we don't need 100% of our employees working in office anymore. We estimate that we're going to have between 60 and 70% of our employees at any one time working in office. That means 30 or 40% of our employees can work remotely. And the way we're envisioning it, we're going to rotate those 30 or 40%, because we look when we're in a post-COVID world, I believe this is going to be a humanitarian blessing that we could work remotely. Can you imagine I think the average BlackRock employee commutes between 45 minutes an hour door to door each way. Can you imagine a life that you got an hour and a half or 2 hours of your life back, whether that may be exercising, maybe helping your children with homework, maybe just relaxing, or maybe, learning another business, another field. These are blessings that could be occurred. Can you imagine Madrid or New York City or London with 30% less car traffic, what it does to the environment? So these are huge long-term blessings. They may have impact on the economies of those cities with fewer people coming in and out. Maybe it's good for the suburbs and things like that. But these are incredible blessings that we're learning from COVID. So what I take from this COVID world, obviously a humanitarian medical issue, we're going to take this and we're going to be advancing medicine in many ways through these vaccinations. But we're going to advance how we live and how we work and how we are educated and how we apply medicine. And so wonderful things.
Can I ask you a different thing, which is, as an investor, you don't have to be, you don't have to be you to have spotted the fact that Apple, Amazon, the tech stocks have had a very good run, right? But I'm really struck by what you said earlier, which was that those companies that are really taking the idea of purpose to heart, you begin to see it play out in their PE ratios. To what extent, Larry, do you begin to see those companies that are not necessarily technology stocks themselves, but those who are making investments in technology, outperforming those in their same sectors that aren't? Are you beginning to see that? And if you do, how do you measure it?
Well, you measure it by performance. I mean, let's talk about something that I know a little bit about, and that's BlackRock and the asset management industry. Our shares are up 30% in the year, and our industry shares are down in the year. We have invested in technology, the connectivity with our clients. We built that technology for 32 years. And we are willing to have a voice, as you know. And the far left and the far right may hate my voice, but our investors, our clients really want our voice. And so we're willing to have a voice where so many other companies are frightened to have a voice. But if you look beyond BlackRock or technology companies, look at some of the pharmaceutical companies that are going to be big winners in this because of that. Look at other consumer companies like Home Depot. As consumers are spending more time at home and they're trying to build a home office and they're changing their behaviors, we're seeing great companies becoming better and stronger. Look at companies like Whirlpool that makes refrigerators. The advancement in technology in refrigerators and sensor technology, and now how people are trying to upgrade their homes. There's shortages of refrigerators. I could go on and on. We have changed their behaviors in so many ways, and so many parts of the leaders of each industry are benefiting quite extraordinary. Now, this may lead to a social issue that many finance ministers and leaders of government may want to ask, but it's making larger companies larger in every industry. And the question is, what does that mean for smaller companies and how do we navigate this? But it's very clear to me, the best companies are winning, and they're winning because of their corporate purpose, but they're also winning because they're forward thinking related to technology.
So can I add something to that? Because one of the things that we have been doing for the last few years, like Larry at BlackRock, we've been investing in building our own software. So we just announced we have built our own digital bank called Open Bank, and we're now merging that with our consumer business in Europe. So we're basically going to take the 20 million customers from the consumer business, which is a single product, and manage them on the Open Bank platform, which is our own technology, our own software, new tech stack, runs on the cloud at a fraction and obviously with much better quality. So there is an amazing opportunity for companies like us to actually do exactly the same as these new, technology companies are doing. And at the end of the day, what we are offering is with the technology from the APIs we've built at Open Bank, we're going to be able to connect with all the new online merchants, e-commerce. It's a very unique opportunity also for us.
And how do you read, you touched when we were talking a few minutes ago on these different pressures. One of them is new entrants into the market. Some of those new entrants obviously don't come in as challenger banks or startup financial institutions. They come in as, very big existing technology platforms that move into finance. So what do you think happens? Because what you're describing, I imagine, is a very big financial institution moving into tech. How do you think this is going to roll out in the next few years?
Well, I just think you need to either have the scale like JP Morgan or Santander has. And so we're going to build our own software, our own payments platform. We're building that, not just Open Bank and consumer, but we're building our own merchant services. We bought Ebury, a fintech in trade. So we will become one of the big players for SMEs trading worldwide, building our own payments platform, which will be the backbone that will unite all our banks. And this is something we're going to build for ourselves and then offer to others. Much the same as what Larry was describing, where, by the way, we're a customer of BlackRock. And I hope one day BlackRock will be my customer in payments, Larry.
Well, I'm not sure this is exactly the place to broker that deal, but I'm aware that Larry's going to have to leave us shortly, because I wanted to just finish by addressing, if you like, the subject of our conversation, which is the purpose in the next normal, right? And I just wondered whether, Larry, you could pull together what you said. We started off talking about purpose and what you said in the letters in the last couple of years. What are you asking of companies? I'm basically asking you what you're going to ask of companies in January in the letter, but what are you going to be asking of companies in the context of technology, in the context of a different rates environment, in the context of different markets environment, in terms of the application of that purpose?
The way you framed the question, Jim, I'm not going to ask those questions because those are actually too short term. All my letters are about long-term positioning, and I'm not here to talk about markets up and down. Companies have to have a very well articulated purpose. They need to identify that purpose, and so we can measure each company as a shareholder how they're doing with that purpose. And so what the most important thing for every company is a well-articulated long-term strategy. And we all know with a long-term strategy, that to me, that's a North Star. When we did our last long-term strategy, let's say December last year, we did not predict COVID. And so we have to pivot, we have to respond. But what we want to hear is how you respond to those market forces, to those developments. What does that mean to your long-term strategy? And do you need to pivot? And that's okay. But the most important thing is about having consistency. We've seen too often that companies jump around with their long-term strategy because maybe the markets are here or that, and we also need to understand how each company is preparing for this technology revolution that's just continuing to roll and roll and roll. And so we all have to be prepared. And then the last thing that I'm going to be very strong on is how are companies being prepared for climate change and the impact of climate change on their company. And no company should be surprised about this vast tsunami that's going to in the capital reallocation that's occurring, and we're seeing this accelerating in this COVID world. Every company should be prepared. And that's one of the things we're going to be asking. How are you preparing your company in this pre-COVID, post-COVID world? About how are you preparing yourself in that long-term strategy, in this reallocation of capital? And that's what's going on.
Larry, can I just ask you within BlackRock about that, right? Because this is an internal BlackRock question, which is, you know, since you've written the letter, as you know, or the letters, as you know, there's enormous scrutiny of whether BlackRock matches the talk with the walk, right? And whether or not internally you've got, if you like, the sort of the advance guard of the ESG, who are totally committed on purpose, but the bulk of the funds do what the bulk of the funds have always done. And I just wonder whether or not you feel as though that balance is, A, whether you think that characterization is at all fair, but whether or not that balance is shifting.
Well, it doesn't matter what I think. So, you know, no one cares what I think. But I will tell you factually.
Not so sure about that.
I will tell you factually, we believe we are moving faster than almost any organization. Keep in mind, we are living under a rule in the United States called the Fiduciary Standard Rule. That was fortified under President Trump's administration. That for all pension funds in the United States or RISA accounts, your only fiduciary responsibility is to maximize return. And they went out of their way to say you can't invest for environmental reasons if you like it, or you can't invest in social reasons because you like it. You can invest in environmental issues if you can prove you're maximizing return. That's consistent with what I'm saying about investment risk. Climate risk is investment risk. And so there are many people from the far left who believe that we should be forcing change immediately. I don't want to go to jail under the DOL because that's a criminal offense if you don't maximize return. And what we've talked about in my letter and what we're doing is trying to develop analytical data to show why climate change is an investment risk. And through that data, we believe we are going to see that tsunami of client money moving out of different hydrocarbon companies into more new energy. We believe that's happening. We've had a record amount of inflows because of our positioning. So we've never seen more inflows in more sustainable strategies than we are in 2020. And the last thing I would say, I think, even SASB calls it the Fink effect, that a 400% increase in companies reporting under SASB. We're making a change, but let me just also be sympathetic to many companies, because you framed this question earlier, James, about how are companies doing this? They're struggling with so many things. We also have to be sympathetic to how companies are navigating and moving this. We need to make sure that companies are preserving their, some form of their business model, because we have to maximize return. So there is no question. There are groups in the world that believe we're not doing it fast enough. We're not talking the walk. I don't agree with that, because what we are doing is trying to navigate what we have to do under the rule of law in the United States, under the fiduciary standard rule. But more importantly, we're trying to be working with companies to build that long-term strategy of preparedness. This is not going to happen in 1 year or 2 years. It's all about working together over the long run, so we can have a more sustainable society. And if we now tell every company tomorrow you have to be 100% carbon free tomorrow, we're going to be in a depression, and then we're going to roll back the coal. So let's be clear: the best way of getting sustainability faster is economic growth. If we go backwards as a society economically, we're not going to be able to afford all the innovation. And we need innovation and technology changes, and it's happening. We're seeing it very rapidly related to solar and other forms of renewables, but it is about a long journey. It's not a short sprint.
Larry, Fink, thank you very much. Thank you for your time. Thanks for joining us, and thanks for speaking so candidly about that. We're about to be joined by Nadia Calviño, the Vice President of Spain. So Larry, thank you.
Bye, everyone.
Anna,
I'm going to hand over to you. Partly, I'd love you to just follow up on what Larry was saying there about the marathon rather than the sprint, and then invite you to introduce the Vice President.
Sure, James. So it is my pleasure, my great pleasure to introduce to everybody Nadia Calviño. She's the Vice President and the Minister of the Economy of the Government of Spain. Well, I have to say she's a bright light for Spain in the international stage and a committed European. She has been a very powerful voice over the last few months, especially on the recovery fund, which is so important. And we heard Larry say how important fiscal policy and targeted fiscal policy that is going to create growth in the future is. And Nadia has been a huge advocate of that. So congratulations on behalf of all of us, Nadia. And I can think of no one better place to tell us today about the challenges, but also the opportunities that we have ahead of us in Europe and especially in Spain. So I'm delighted to welcome you, Nadia. Bienvenida. I leave you with James, and great to have you with us. Thank you so much.
Thank you, Anna. Thank you very much. Vice President.
So, yeah, hi. No, good afternoon. It's a pleasure to be here. I don't know if I'm supposed to do an introduction or if we're going to have Q&A straight on.
I tell you what, we're going to be particularly generous and say, Vice President, if you wanted to say a few remarks on how you see what's happening in Spain and I see things more broadly in Europe, we'd love to hear from you. And then I've got a few questions.
Okay, very good. Well, I seem to be the only one that's not at home, and obviously I'm speaking from the office. We're extremely busy running around, but I could do this event from the office, and I'm very happy to participate, and I'm very, very grateful for the very kind words of Anna just a moment ago. Obviously, I think it's also great that we were able to organize and put up this conference even in these times of pandemics and in these exceptional circumstances. Well, maybe just a few words to share some thoughts with you on where we are in Spain. I think the word that probably is repeated the most these days, apart from elections in the last 48 hours, is uncertainty. We are in times of uncertainty. There's a high uncertainty around the world about the development on the health side, political development, also developments on the economic side. And in these times of uncertainty, I think it's quite good to stress those elements that provide some certainty and clarity going forward. And the first element that I think is important to highlight is that from the beginning of the pandemics, that was when it hit us in Spain, beginning of March, the government acted very promptly and very decisively to try to mitigate, to offset the potential negative impact on the health, on the economic, and on the social front. The Spanish economy was growing quite strongly for the last 5 years, and we foresaw that 2020 was going to continue to be a year of strong growth. You know, discussion was whether it was going to be 1.8 or 1.6. You know, the growth rate nobody anticipated. That, of course, the scenario would change very, very dramatically as of March. But very strong, very fast, and from the beginning, we put in place a safety net, which includes liquidity measures to sustain the economic tissue. Also, compensation for self-employed workers, which are an important part of the Spanish economy. Also, short-term work schemes to protect jobs, and also a safety net for family and household incomes. And these measures have been very effective to prevent a more dramatic impact in terms of GDP drop and in terms of job losses. They have prevented the repetition of the classical pattern of previous crises in Spain with massive job destruction in the first instance. And they have protected a basis which can sustain the economic recovery. The second certainty, or the second element, which gives some light, is the fact that we see that the Spanish economy continues to be very dynamic the moment that the pandemic is under control. The data from the third quarter of this year showed very strong growth, 16.7% quarter on quarter. This was above all expectations. It was significantly higher than our own expectation in the ministry. And this shows that what we have seen in previous crises, which is that the Spanish economy is very dynamic and there is a strong rebound once the crisis is behind, is still there, and therefore it gives room for expecting that if we manage to control the outbreaks and the moment that we will be able to control the pandemic, the Spanish economy will continue to grow and growth will be stronger in 2021. The third element that I wanted to mention is the fact that we have a plan. We have already presented a draft recovery plan. We're working now on the details. We are in a dialogue with the European Commission so that we can put it on the table as soon as possible and get the okay as soon as possible and get the European funds flowing as soon as possible. But we have a clear vision which is shared with the Spanish economy and the Spanish society, that we want to have a strong recovery in 2021, but we want to also transform our economies. And Larry Fink was just talking about these, the twin, green and digital transitions. We really want to be in the forefront of these transitions. We think we're very well placed to lead this process, and we're working on a plan to make this a reality. And the final point I wanted to make, which is a positive signal and which was not there, I must say, in previous crises, is the strong commitment by the 27 member states, and I think by the whole international community, to coordinate our actions, to respond to the crisis in a coordinated manner, in a consistent manner, through the good articulation of monetary policy and fiscal policy, to support the economic recovery and job creation, and to ensure that we get out of this crisis as soon and as strong as possible. And I think this global commitment, which I sense in all the international meetings, be it at the European Union, but also the G20, IMF meetings in the last couple of weeks, there is a common vision and a very strong sense of commitment, a very strong sense that we're on the same boat and we need to work together, to row in the same direction to get out of these exceptional circumstances together. And I think that these four elements should provide some certainty awaiting for the outcome of the US elections to try to see the light, in the middle of these times of uncertainty. Let me stop here, and I'm happy to take your questions.
Well, Vice President, thank you. We've talked a little bit, Larry Fink was talking about short-term pessimism, but long-term optimism. So I think you've continued in that spirit. I'm really aware that we've talked about the demands on big businesses in terms of purpose, and listening to you talking about the global coordination that Anna mentioned at the beginning. One of the big drivers of an economic recovery is going to be small and medium-sized enterprises. And I know there are lots of people who are joining us today who are thinking, how are we going to get the growth from those companies? How are they going to access the capital to make sure they can grow and then start employing people, particularly young people? And I just wondered, when you think about that set of problems, both from a Spanish perspective, but from a European one too, how you think Spain and Europe should tackle it?
Yes, well, I mean, the first thing that we need to do is to avoid that they disappear. No, we need, in order for them to grow and to be stronger, we need to keep them alive, and that's why the safety net or the measures that we adopted in the last months have been very targeted towards SMEs, which form the vast majority of companies in Spain, and the self-employed workers. And these, actually 98% of the credit which has been mobilized by the public guarantees, and we have mobilized over 100 billion euros of credit together with the financial sector, which this time around is playing a constructive role and is part of the solution. 98% of the credit has been going to these SMEs and self-employed workers. Also, the short-term work schemes have protected SMEs for the first time, and maybe some of these schemes have had one or two workers protected, but the vast majority of the societal and economic tissue has been protected, and that's SMEs. So we need, going forward, to not only ensure liquidity, but also protect their solvency, make sure that we do not have SMEs that go bankrupt just because of the COVID crisis. We need to identify which of them were solvent before the crisis in order to continue to help them capitalize, as you were saying. And then moving beyond the coming weeks and the coming months, SMEs are going to be key targets for part of the recovery plan, in particular insofar as the green transition and digitalization is concerned. Yes. We think that the digitalization of SMEs is one of the keys to the digital transformation of the Spanish economy, to increasing productivity and potential growth for the future.
Thank you, Vice President. Thank you. Annabel Bouton, I'm going to come to you where our time sadly is running out. So I want to come to one final thought from you, Annabel Bouton, and then I'm going to come back to Nadia Calviño for one final thought too, which is, what do you do to give people confidence in concrete terms, rather than just in terms of what we say, in concrete terms about the economic prospects into 2021?
Well, I think the single most important thing right now for people is the sanitary crisis, which is still ongoing. So I do think we need to make sure that people understand that, and I was giving some numbers before Nadia and Larry were here, that it is possible with adequate test and track and isolation to have quite a safe, not normal, but working life. You need to limit how much you go out and certain social activities. And, we're doing this in Spain and many companies across the country, but I think that's crucial because, again, as Nadia was saying, it's crucial to keep companies alive. The more companies we keep alive, the more, jobs will be saved for the future, because once a company closes down, it's very difficult for them to open up again. So I think, again, giving people confidence on the sanitary side in the short term is super, super important.
Annabel Bouton, thank you very much. I'm going to give the last word, if you don't mind, to the Vice President. And Vice President, Anna, thank you so much for joining us. But Vice President,
thank you.
What do you do about that same thing, the confidence point, so that businesses are not only supported but sustained in making investments into 2021?
Yeah, I think that the first thing, 3 points, so 3 reflections, I think, what can we do from the government, no? I think the first thing that we need to do is to continue to support them and to show that we are committed, with continuing to protect this economic tissue, and that we have a plan and we have a vision that can provide them some expectation of where we're going, and that it is worth sustaining and not giving up in these dire times. The second thing that I think we need to do is to continue to send a consistent message with our international partners. The fact that the European Commission, all governments in the European Union are confronted with the same challenges and are providing similar responses and are acting in a coordinated manner, I think also provides trust to citizens. This is challenging in the area of health, because we see that there are different measures being taken and we're learning from each other. There's still many questions out there, but the more that we act in a coordinated manner, I think provides more certainty also to the companies. And then my third point is that we should put our money where our mouth is. And that's why in the draft budget that we have just proposed to the Parliament in Spain, and that I hope will be approved by the end of the year, we have reflected this vision. I mean, the draft budget for 2021 incorporates 39 billion in public investment, mostly funded by the European funds. And these investments are going to be directed to where we fix the priorities in our recovery plan. And we are very committed to the green transition, to digital transition, to investment in human capital, innovation. And we're going to be putting the money where our priorities are. And this, I think, should provide also a very clear roadmap, which can mobilize private investment and which can result in have a multiplier effect also in terms of growth and speeding up the recovery in the coming years.
Vice President, thank you. I actually think one of the things that's most important at a time like this, when it's very hard to see beyond the end of this week or next week, is actually having and hearing that longer term thinking, that planning is happening. For some of us who don't necessarily understand exactly how you plan for an economy, just to know that that planning is happening is so invaluable. I also want to just apologize. I know that you think those of us in London live in the darkness, but actually it's just that my light bulb went, so I'm darker than usual. But if it's done anything to convince people in Madrid that people in London are living basically in a world of darkness at about 4 o'clock in the afternoon, I'm sorry for living up to that stereotype. Vice President, thank you for your time. It really is, it means a lot to everyone.
Thanks to you. It's a pleasure to talk to you. Bye-bye, take care.
Thank you. And I'm just going to, I'm going to close. This has been an exceptional year by any measure for everyone in the world, and even in our own small way for the Santander International Banking Conference, because we've managed to bring together people from all over the world, speakers and thinkers from all over the world. And as a result, I'd like to suggest set our sights a little higher in terms of the world that we're thinking about, not just about finance, not just about banks, but about the central idea of this afternoon's conversation, purpose in the next normal, the link between our markets and the society we live in. And I just draw, in a final concluding observation, that we've been pulling at things that are living in twos, both the sense and the need for global coordination, but a real sense of place, of the importance of what is local. The reality that there are expectations on public companies, as Larry Fink was saying, but there are also now different expectations on private companies and this public-private partnership that is needed. We talked a lot about technology, about how the digital is going to transform the way we work. We heard how digital is transforming Santander. We heard how it's transformed BlackRock. We heard from Yascha Mounk how it's transforming the nature of politics. But there is this other force, which is the very human force, the very human experience of living in the pandemic and realizing when we are operating digitally how much we miss each other personally. And then the final point, the point I suppose that Anna was making right at the end there, which is this link that possibly was obvious but has been made very clear to us between our health and our prosperity, and making sure that we can understand the connectedness that we all have to our planet and to each other. And so I hope that in the course of today's conversation we've had both those little glimpses of the way people think, long-term optimism and short-term pessimism, the way people think about purpose actually playing out in the performance of companies and the importance of investing in those, but the way that we all link in our business lives to the world that we live in. And so I hope that everyone has felt that they've learned something, got something from this, the 13th year of the Santander International Banking Conference, but the first one in such circumstances and the first one that's been done digitally. I apologize that we can't give a round of applause to Nadia Calviño, the Vice President, that we can't do the same for Annabel Bouton, the Executive Chair of Santander, for Larry Fink, the Chief Executive and Chairman of BlackRock, or for Yascha Mounk, the Professor at Johns Hopkins. But a thank you to all of you for joining us. It's been an extraordinary few weeks of conversations, and look forward to seeing you again next year. Many thanks.